Hello guys, welcome to another video. In this one we are recapping the entire trading week from the 11th until the 15th, and we are going through each setup that we took this week and giving a little bit of more insight into what are we actually looking for before we take these trades, before we enter the setups that we are presenting the group. So we'll take GBP USD as an example because we had 3 trades this week which all went into profit. First we had a short position on Tuesday, then we had a long position on Wednesday due to the CPI, and then on Thursday we had another short position. And all of this I want to give a little more insight into why we took these trades and go through the charts with you, both the DXY and GBP USD, just for you guys to have a more in-depth understanding of what we are looking for when taking these trades.
I can't believe I did that.
So jumping into the charts, we can see that the dollar has been quite strong for the past few weeks, holding a lot of key levels throughout the month of March into the month of April. And since April started, it's been just a runway up. We did surpass the 100 level last week, and this week we sustained above it, and there's a lot of reasonings why we took the trades that we took on GU based on the sentiment from the dollar. Okay, so last week we did make a high of 100.20, and that led us into the beginning of this week with that in mind. Okay, so if we know this, we would look into what day of the week is this actually being retested, which was on Tuesday. All right, and we would see that dollar weakness into, for example, the US session. London was here around 9 a.m., 11, 1 p.m., and then we had the dump, okay, in the switchover into the US session. But throughout the US session, we did in fact surpass that high. So we got some dollar strength due to the CPI that came out. It came out at 8.5, a little more than expected, and this does give a boost to the dollar, all right, in the short term. In the long term, of course, we are still evaluating the long-term effects of slow growth, high inflation. That's also one of the reasons why we also took a long in gold, all right, because it always serves as an edge against inflation, but that's for another video. So having this into consideration, this high, we go into the GBP USD, and we notice that we had the lows from last week, all right? We had the lows from last week that had already been rejected from 4 weeks ago, right? So these lows of 130 psychological round level are super important, super strong. We always need to have a good consideration about these levels. There's always a high probability that the price will bounce from them, and we need to be aware. We need to follow through with price action to understand if it really wants to bounce and what opportunities can we take throughout the week. So knowing that, for example, this low got retested and bounced, but still the structure keeps on being bearish, all right? We have these lows from Wednesday that also are being rejected around there. We have a strong feeling that there's a slight possibility that this momentum will continue into the next week. And this week that just passed was loaded with fundamentals, both CPI for America, for the UK. We had rate hikes from Bank of Canada. We had loads of data coming out. And this just provided us with sentiment to shift from longs to shorts to longs, right? So now let's just break step by step what we were looking for, because we had Monday instantly rejecting the lows, all right? And then we go into Tuesday, which is when the CPI was coming out for the US, and we know that this region right here was rejected on Monday, all right? We did respect the lows from Friday, all right? We didn't even get there. But this jump is literally just based, if we mark it 7:30 a.m., 11 a.m., right? If we come into the DXY and we look closely what happened exactly, we will see that from 7:30 a.m., 8 a.m., the DXY indeed had this downfall, right? This is sufficient for GU to have this bounce, right? We are on the 130 level. If we look at other dollar crosses, they all bounced on Monday, and this is all in expectation of what might happen with the CPI on Tuesday, all right? On Tuesday, that's what we were looking for. The DXY did reach the highs from the previous week, but after this huge dump that was the result of the CPI numbers, the dollar just rallied, okay? And that rally, it's exactly what we were looking for in order to take our first trade of the week, which was this short position, trying to reject the highs from Monday, all right? Trying to reject those highs. Of course, our first setup had our stop loss at 130.80, all right? So if we change this to 1.3080, we will just be waiting for price to reject it. This was the highs of Friday that we were trying to reject, all right? When the CPI data came out, price of course rallied into our level. We got in the trade, and as soon as the DXY started reversing, right? Started reversing and gaining a lot of momentum up, of course, we just reduced our stop loss into the 30.55 area, and we just allowed the trade to play out into our target. Our initial target was actually 29.50 because I was expecting way more dollar strength, but we got to 29.75, and I did mention for us to take profits. Shorts taken on GU, expecting lows to be reached tomorrow with CPI print. So we are talking on Tuesday, and we were expecting also the price to come lower with the CPI print for the United Kingdom on Wednesday. Okay, so having that in mind, we took the short on Tuesday, we rode it into Wednesday, and in fact, when the numbers did come out for the UK, that's when we shifted from having a short position into a long. But as you can see over here, the target was 1.2950, and we closed some partials on the Asian lows and New York lows from the prior week, and our trade was closed 25 pips shy of our overall profit, because this could easily have been just a liquidity grab, right? And we just wanted to secure the profits. Having CPI data coming out, we didn't want to be risking or being exposed to the market's volatility, okay? So we just closed our first short for the week with 75 pips in profit, and we soon started looking into our next trade. Our next trade, we just waited for that liquidity to be grabbed, and then we started looking what might happen if the UK data will come out better than expected, right? Which it did. So CPI data came out So following in the fundamentals, we were following up with the data from the US CPI, which came out, as I mentioned, at 8.5. We were following up with the DXY, which first rejected that 120 level and then started rallying. On Tuesday, the UK CPI actually came at 7%, and before was 6.2. So actually 0.8% higher than the previous print. So this just gave us a bit of hawkishness into the UK, all right? As always, this is just in the short term. Of course, we are long-term bears on the bound, but we always need to be reacting and adapting to what the market is trying to price in. So having this information, of course, we took it as well as the DXY rejecting the 100.50 highs, which as well acts as a psychological level. And this was Tuesday into the New York session. All right, we printed the highs of 100.45 around that, and into Wednesday 8 a.m. over here we also rejected the 100.50 level. Okay, so having all this in mind, knowing that the prior week rejected at 100.20, we rejected it on Tuesday, but soon after, just after the CPI print came out, we rallied, and on Wednesday we started to reverse again and we lost a lot of momentum on the dollar. So Wednesday was actually a weak dollar. We had a weak dollar, and only on Thursday again we regained that strength. So playing this out in our minds and knowing that the Monday lows got respected on Wednesday and then on Thursday it also respected and shifted the momentum, we are just playing with this, literally. We are playing with the lows being respected into the highs getting rejected into the lows getting rejected into the highs getting rejected into the lows, and vice versa. So these are the directional bias that we need in order to start taking our trades on GU. All right, so after Monday and Tuesday we planned our trade, we took our setup and we closed at 75 pips profit. We started looking, because you need to realize we are around 1.30, which is a huge psychological level for the pound, and there's always a big possibility of a bounce, at least 100 pips, 150, 200 pips. And having this in mind, we started using the schematic from the week off, and we noticed that we had a preliminary support, a selling climax, an automatic rally, secondary test on phase B. We mark these levels, these key levels, and we are waiting to see how price will react, because if this was actually a liquidity grab, we will just wait for price to come into a certain level in order for us to take our long position. Here we had a stop loss below the lows, all right, around 29.70, which was around 20 pips. And we just waited to see if price could respect, for example, these London lows from Tuesday. All right, so having this in mind, we were just scanning price in the lower time frames, waiting for it to give us our entry, which it did. After the DXY rejection of 100.50, this gave us the confluence to take the long into new highs. We were just expecting price to reach either Friday highs or this Wednesday and Thursday highs, which was around 1.31 level. All right, and having this in mind, we just use the schematic, we use our confluence with the DXY, the momentum of the fundamentals and the sentiment was on point, and the price just rallied to the upside, giving us our second trade of the week in profit. Soon after, we just shifted our SL into break even, took 50% of the position in the first highs, and just allowed it to run, and TP was hit for 80 pips. Okay, this of course gave us the second trade of the week done, and we started looking on Thursday into Australian unemployment rate, which I will also go over this trade in a little bit. But the DXY itself, the dollar, we have this sentiment that it has to rally. We are long-term bulls on the dollar, all right? So every dip we need to be aware in order for us to buy the dollar and short the dollar crosses. So we took this idea into Thursday, all right, after our trade played out on Wednesday. And here we start Thursday, all right. The price still rallied into 1.3050 during the London session. But the DXY itself, as you can see, at midday 30 had a huge jump. But as we were mentioning, the price just rejected 150 into the lows from Monday, all right? And we know there's a high possibility that this can hold due to how the dollar has been so strong. So knowing this, and also knowing that the UK has slow growth and there's no way these prices are sustainable, we know that we are just looking for the highest spot to actually sell the pound and take it into the lows all the time. We are easily retesting the highs from the previous week, all right? So as long as we don't surpass this level from the previous weekly highs, we are completely bearish, all right? Even if we show these types of bounces, even if we show that liquidity has been grabbed and we are roaming with a lot of momentum to the upside, this shouldn't fool you, because we need to keep the sentiment in check. We need to know which direction we are actually taking and not get fooled by these manipulations. This was nothing else than just a bounce from the 130 level, with also the DXY rejecting the 100.50 level, which is a huge psychological level for the dollar as well. But as you can see, the dollar bulls are in control. The dollar bulls easily take price back into the highs, which then gave us the opportunity to actually take the third trade of this week, which was our short position from the highs. Our stop loss was around 1.3159, right? And our entry 1.3145, and we were literally just waiting to see if price would reject these highs, okay? And if we could take down the first Asian lows, which was around 1.3113, and the second, which was this level right here at 1.3090. We just waited for price to tick our position in the London switchover, pre-London session, 7:45. We got in and we just rode that momentum of the dollar bulls into the US session, all right? We were just waiting for the US session to switch, and we got that huge dollar strength and pound weakness, dollar crosses weakness, of course, followed through, and this just melted. We should have got way more, but we are happy with the profits that we take, with the TPs getting hit across the board. It was a clean week, and of course we came in to retest that level from the automatic rally. I still want to see this long term come below 1.30. And of course, this Friday was Holy Friday for Easter, so not much volume. As you can see, the price just traded sideways across the board in other assets as well. So having all this in your mind, you have a better picture of why we took each setup. We took the first setup on Tuesday, trying to reject the highs from Monday and trying to bring it into the previous weekly lows. All right, we took the price to the weekly lows, price grabbed some liquidity, we adjusted our TP in order to get out over there due to what we were seeing. We waited for Wednesday for the UK print, and we saw that rejection from the 100.50 level in the DXY, giving us that boost on the pound, and everything was aligned for that bounce. Okay, we took our profits, waited into Thursday, and on Thursday we were around 1.3150, which can also act as a minor psychological level, and we know there's a way higher possibility of it rejecting the previous weekly highs and taking it back into the weekly lows than actually the price surpassing it, because there was no momentum. There's nothing suggesting us that the pound should be trading higher. So based on all this, we just waited for that dollar strength to kick in. It kicked in, and we just followed through with the short on the pound into the US session switchover. So as you can see, most trades are being held and traded into the US session on that switch from London into the US session, because we are just noticing that the price during London is just preparing that US session. Based on all this volatility that has been happening in the markets and so many data and events moving the markets around the world, we need to be aware that the actual volume that is moving the markets comes from the dollar. The dollar sentiment is what dictates. The dollar is king. The dollar is what gives us the direction, and then we cross that information with what we are seeing in the dollar crosses. So always keep that in mind. And this was just a breakdown from GBP USD. If we take the same idea of dollar strength on Tuesday, dollar weakness on Wednesday, dollar strength on Thursday, and we look into AUD USD, we got a perfect entry as well around the psychological level of 0.75, and this was as well aligned with our short from Tuesday on GU, because we were expecting dollar strength. So we just thought aligned it with what we were seeing in the DXY. We took the short on GU and we took the short on AUD/USD. Okay, we just waited for that 1 minute break of structure, which if you guys already saw the course, the market structure video, this is pretty clear for you guys. So what we were looking for again was that rejection of the psychological level aligned with what we were expecting, which was dollar strength. And as well, we saw here on the fundamental tab that we were also expecting on Thursday that the Australian unemployment rate would rise, okay, or at least stay the same. But there's nothing telling us that the Aussie should be rising in value. We need to keep in mind that China is actually in lockdown. There's loads of people in lockdown. There's slow growth playing out as well, and all this affects the Aussie as well. So there's nothing telling us that the Aussie should be trading above 0.75 psychological level, and we were just watching the chart, watching the structure play out, higher lows, equal lows, higher highs, higher lows, higher highs, higher lows, and until we got that break of structure right there, that's when we took the trade. Our stop loss was above here, but soon we just lowered it, and price just gave us a clean rejection of 0.75, and we just rode it all the way down into 0.74. okay, this was as well Tuesday into Wednesday, and the Aussie, even though we got that dollar weakness on the end of the London session on Wednesday, the Aussie still traded way lower into our target. So this was a clean trade, 90 pips, around that, 85 pips. Of course, we had Tuesday, Wednesday, and on Thursday as well played out the same thing that we were expecting. We are always aligning the dollar crosses across the board. So if we were expecting dollar strength, GBP/USD was due to fall, and we just took these ideas into the AUD as well, because we just saw the print of the unemployment and nothing changed, so that's bad for the Aussie. And having all this in mind, we just waited for the retest again of Monday highs around there, and we just got a clean rejection of the highs. We didn't send it a trade, but on the live trade I did mention that this was due to come to 0.74 again, and that just gave a clean trade idea on AUD/USD on Thursday. As well, Friday, again Easter, low volume, nothing happened. So having all this in mind, guys, I hope you got a better picture of how we are finding our trades and how we are mixing both the fundamental side, the narrative, the directional bias that we get from the dollar and from the data that is coming out, and align it with the charts, with the psychological levels, with the structure, with the previous weekly highs and lows, and how we trade accordingly and have a clean setup to ride our bias. Okay, besides AUD/USD and GU, we also caught a really nice trade on gold and on GJ as well. We started the week with the GJ trade, just based on some Japanese printings as well and some pound weakness. But that's basically it for this week. This video was just meant to be a trade recap in order for you guys to understand better how we are finding these trades. So I hope you guys enjoyed this breakdown. I hope you got something from it in order to better understand how we are going with finding the setups for the group. If you find these trading recaps helpful, just let me know. I'll try to do this every single week, recapping all the trades that we took from the week, which actually this week was pretty damn good because we didn't get one stop loss. And I feel if you do this exercise with me, recapping the week, recapping the trades that we actually take in the group, you will evolve way better and way faster by understanding how we actually get into sending the setups, into the moment that we pull the trigger. So I hope this helped you guys, and I'll see you on the next video.